I'd say I was on air at the time when the news broke. My initial reaction was this was a hawkish hike. Maybe others had that reaction, but once you dug into the details, actually the outlook for the economy turned it into a dovish hike fairly quickly. We saw a significant repricing. Basically, the Bank of England has issued probably its most gloomy outlook for a very, very long time, and certainly one of the most gloomy outlooks of any major central bank. The Bank of England is basically warning that Britain is going to face double-digit inflation and a prolonged period of stagnation or even recession. I spoke to Governor Andrew Bailey a little bit earlier on about the market reaction to this.
I wouldn't agree with the statement that the cure for higher inflation is higher inflation. But I just want to go one step behind that because I think it's important. We think that a lot of the work in terms of the cure is going to be done by the fact that we are experiencing a historically large shock to real incomes in this country coming from outside the country. So it's a terms of trade shock in that sense. Import prices are rising. That's predominantly energy, food and some core goods. So I just want to, high inflation cures high inflation. No, of course it doesn't in a sort of what you might call a sort of standard demand shock where both activity and inflation are going up. But what we've got is inflation going up and this big push down on real incomes. And it's the real income push that is the thing that we think will do a lot of work to lower inflation. But here's the complication. There are risks the other way, and one of the big risks the other way is the labour market. We've got a very, very tight labour market in this country. Now, of course, it's a good story in many ways for broader society and economy because we've come through COVID. There were a lot of predictions, including some by us at some times, that we were going to have quite a big rise in unemployment, in the end it didn't happen.
Why are you so convinced that wages are not going to rise to meet the inflationary push that we're seeing? I hear what you're saying about the cost of living crisis, but nevertheless, there is a risk that we see wages going higher. You talked about this in the press conference. There seems to be a gap between the bank and business. I talk to CEOs all the time. What they tell me is they are really struggling to hire. They are, as a result of which, having to raise wages to compensate for that. And as a result of which, while at the moment wages are below where inflation is going to come down, but the labour market may stay tight and we end up with a situation where actually that spiral starts to bite.
Well, and that's why we think there are risks on the upside to inflation. But we also think that the core story here is a big real income shock to the country, national real income shock, which will push down both on household income and company income, cuts down on corporate margins as well. And that, we think, is going to slow the economy down. It's going to slow demand in the economy down. And we're probably already seeing some signs of that. I mean, look at the gap between consumer confidence and business confidence in this country, which is quite large at the moment. Yeah. We had and I never advocate putting too much weight on one number, but we had quite a weak retail sales number a couple of weeks ago. So we are seeing some signs of things beginning to happen. And we think, unfortunately, this shock to real income has to come through. I mean, there's no way it can't go anywhere else, unfortunately, and that will affect. But you're right. I mean, I go around the country a lot. At the moment, and this backs up the business confidence story, firms are saying, my problem is I can't hire enough people.